Hey, what if there was a trading tool that could help you nail your entries in a trending market, like with some serious precision? Well, today we're going to break down a strategy that does exactly that.
Okay, so what if you could find this tiny, specific zone, the exact spot where over 75% of successful pullbacks decide to turn around and keep the trend going? I know, that sounds a little too good to be true, right? Well, stick with me. We're about to break down how this whole thing works, and honestly, its power is pretty amazing. All right, so to really get this, we're going to take it step by step. First up, we'll talk about a huge problem that every single trader runs into. Then, I'll introduce the tool that's designed to solve it. We'll watch it play out in a real trade, and this is the cool part. We'll see what happens when it doesn't work and what that can teach us. And finally, we'll wrap it all up and show you how this gives you a whole new edge.
All right, let's just dive right in. And we're going to start with a frustration that, look, I'm sure every trader out there has felt. You always hear it, right? Buy the dip, sell the rally. But when you're actually staring at the charts, it's a whole lot trickier than it sounds.
I mean, this really is the million-dollar question, isn't it? You see a big, powerful move up, the trend is confirmed, awesome. Then, the market starts to pull back, giving you that perfect chance to jump in. But where? Where exactly do you click the buy button? And here's where the theory just smacks into reality. The textbook idea is simple. Just buy in the discount zone, anywhere in the bottom half of the price move. Sounds easy, right? But the reality is that zone can be absolutely massive. We're talking 50, 80, even 100 pips wide. That's not a precise entry point. That's just a huge area of hope. It doesn't tell you where to act. So how do we fix this? How do we go from guessing to executing? Well, that's what's next. We're going to look at the solution, and it's all about taking that gigantic, vague area and shrinking it down to a super precise target. And the tool that gets us there is called Optimal Trade Entry, or OTE for short. Now, what it is a very specific zone that we find using a Fibonacci tool. It's this little pocket right between the 62% and 79% retracement levels. That's our sweet spot.
And finding this thing? It's actually a super simple three-step process. First, you just got to know which way the trend is going. Easy enough. Second, you grab your Fibonacci tool and draw it from the very bottom of that big move all the way to the very top. And boom. Third, you just isolate that little zone between the 62 and 79% levels. That's it. That's your high probability target.
Okay, enough theory. Let's see this thing in action. We're going to walk through a trade step by step on a real 1-hour chart of the Euro USD. So, first things first, we got to have the right setup on our main chart, our higher time frame. We need a nice, clear uptrend, higher highs, higher lows. Then, we wait for what traders call a break of structure. All that means is that the price smashes through a recent high. It's a huge signal that the buyers are still totally in charge. As soon as that happens and the price starts to pull back, that's our signal to get ready to hunt for an entry. And look at that. This is the whole point right here. Just by drawing that one tool, we've gone from this massive, uncertain 50-pip guessing game down to a much smaller, much more refined, actionable zone. I mean, that shift alone is just eye-opening, isn't it? It gives you so much more clarity. Okay, now for the actual entry plan. This is super important, so pay close attention. It's a multi-step process. Step 1. On our 1-hour chart, we just sit back and wait. We have to be patient and let the price come down into our OTE zone. The second it touches that zone, we immediately drop down to a lower time frame, say the 5-minute chart. Now, why do we do that? We're looking for our final confirmation. On this little chart, we're waiting for something called a change of character. It's basically a tiny shift. The pullback makes one last little low and then pops above a previous little high. It's our green light, the signal that the pullback has run out of steam. And that's when we hit the button and enter the trade.
But, let's be real. No trading strategy is perfect. Nothing works 100% of the time. So what happens when you do everything right? You find the perfect OTE zone, price comes into it, and then just keeps going? Just slices right through it? Is that it? Is the trade just a failure?
I guarantee this is a scenario every single one of you will run into. You've done all your homework, the trend is clear, you've marked your zone perfectly, price taps in, and then instead of that beautiful bounce you're expecting, it just blows right through it and closes below. So frustrating.
And your first reaction, of course, is probably something like, well, that was a bust, on to the next setup. But hold on. What if that failed trade was actually a clue? What if it was sending you a really, really important message?
And this, to me, is maybe the most powerful part of this whole concept. When an OTE setup fails, it's not just a losing trade. It's information. It's a flashing yellow light, an early warning signal that the big picture trend is running out of gas and might be about to reverse.
And we're not just talking about a hunch here. In the examples that were analyzed, when this OTE zone was violated, it gave traders a full 24 hours of advance notice before the trend officially confirmed a reversal on the chart. Think about that. That's a one-day head start on everybody else.
So let's just put these two scenarios side by side. When the OTE zone works, when it's respected, price hits it and bounces hard. That's your sign that the big money, the institutions, they're stepping in and buying. The trend is healthy. But when the zone gets violated, when price just cuts right through it, that tells you the exact opposite. It's showing a serious lack of buying interest. The big players aren't defending that price anymore, and that means the trend is probably in deep trouble.
Okay, so let's wrap this all up. Let's see how this one simple tool actually gives you two different kinds of edges in the market.
This is what I like to call the OTE dual advantage. Think of it like a sword and a shield. It's an offensive tool because it gives you this super precise, high probability zone to attack the market and join a trend. But it's also a defensive tool. When it breaks, it acts like a shield, giving you one of the earliest possible warnings that danger is coming, that the whole trend might be about to flip.
And this quote just nails it, really. The true beauty of this whole idea is that even the trades that don't work out, even the losers, give you incredibly valuable information. Information you can use to defend your account and get yourself positioned for what the market's going to do next.
So there you have it. We've laid out the entire strategy. You now have a tool that gives you a crystal clear area to look for entries, and it acts as an early warning system. You know, the technical side of this, it's actually pretty straightforward. The real challenge, the real question I'll leave you with, is this. Now that the optimal entry is clear, are you patient enough to actually wait for it?